right, good afternoon. It's another Friday Live with Collab. And generally speaking, I have my partner in crime, Megan Marsh, here with me, but she's actually at a wedding today. Our co-founder, Andre, is getting married. I wasn't invited, but that's okay. Just met these guys. So I want to talk today about integrated mortgage services. And this is a very timely topic for me personally, because one of the greatest things Collab does is it helps individuals start their own mortgage company under a franchise model, which means you can focus on business development and company growth while we set up and run the platform, provide all the systems, the structure, the legal, the compliance, audit prep, marketing, business development, licensing, lender and vendor management. There's a whole litany of things that we do behind the scenes to ensure you, again, can focus on business development, company growth, recruiting. We even help with the recruiting process too, but that's a whole other conversation. The reason this conversation is timely is because I've talked to two real estate company owners just today. In fact, I was almost late for this call because I just hung up with one of those company owners that wants to open their own mortgage company. And the traditional models of desk rental agreements, MSA, affiliate agreements, branch models, these things that we've done really since I started in the industry 30 years ago, almost 30 years ago, I should say. I think they worked for a period of time, but you can really, for a lot of reasons, benefit by simply opening your own mortgage company. Now, opening your own mortgage company is a daunting task. And by the way, when I say opening your own mortgage company, I'm talking to real estate broker owners, large franchise owners. I'm talking to loan officers. I'm talking to branch managers that want to take that entrepreneurial step, go off on their own, and keep the profits in-house. So when you open your own mortgage company, in theory, you could do it on your own. The problem with that is you're going to make mistakes. It's a long and steep learning curve. It's a highly complex and regulated business. And there's three ways then to get help with all of that, right? You can either do all the research, do all the work on your own. You could hire somebody to do that for you, which is a very expensive proposition because it would be a highly skilled and therefore highly compensated individual. Or you can outsource it to Collab and we can do all of that for you at a fraction of the cost. Now, I mentioned all the traditional models a minute ago. Consider this. I've got several examples actually where we'll do pro forma, right? We do pro forma P&L models where we do a side-by-side comparison of your current relationships and what it would be like if you opened your own company. It's not uncommon in those models for us to 4x, 5x, sometimes more X your income in your own mortgage company. Because think about this from the standpoint of revenue. Your real estate agents, or you as the agent, you as the loan officer, you're generating your own leads. You're spending the money on marketing, you're spending your own time, you're building the relationships, you're generating your own leads. And in the case of a real estate company, you generate the lead, your agent then asks, are you pre-approved or are you paying cash? And then you immediately refer that lead out to a mortgage company and the revenue goes with it. So in our model, when you open your own mortgage company, you can therefore keep that revenue in-house. And it actually, it's a complete win for the client because you're keeping that revenue in-house and therefore splitting that revenue amongst fewer people so that the rates are better for your client. The customer experience is better for your client because the messaging is consistent. It's everybody's in the same team, moving in the same direction. And clients prefer it anyway. There's a Housing Wire article that I can send anybody. In fact, if you like this article, just send me a DM. You can find me on any of the social media channels. But the article in Housing Wire states that the vast majority of home buyers prefer one-stop shop anyway. It's easier for them. It's a better experience because the communication is more consistent and the client can save money and the real estate company can keep the revenue in-house. It's a win across the board. It's a great win for the loan officer involved too, because if I'm a loan officer in 2024 and I would get approached by a real estate company that wants to open a mortgage company and have an in-house, a true in-house relationship, not just a partnership, not just an exchange of money for a desk, but it's a true partnership, I would love that opportunity. So it's really not hard to backfill these opportunities with good quality loan officers because of the additional business that can become a part of this. Loan officers. So I've been talking to the real estate owners for a minute here, but if you're a loan officer and you're working for one of the big banks, one of the big retail companies, think about all the margin that has to go to feed all the mouths that are at that company or to build all that infrastructure. And there may be a great deal of value to you as an individual to have that level of infrastructure and marketing support. But if you're self-sourcing business, you might not need all of that bloated infrastructure. You might be that true entrepreneur that can create, with the right platform, can create your own company and keep a large portion of that revenue in-house in your own pocket and either take additional income, invest back in your business. Maybe you have a real estate, maybe loan, again, I'm talking to loan officers, but maybe you know a real estate company owner, a boutique company owner that would want to create this partnership and you create a company together. One of the other calls that I had this morning, it's been a busy morning, but another call this morning was with a loan officer that's in a traditional affiliated business arrangement with a mortgage company and a real estate company. That particular lending company is, let's say, just dropping the ball, right? So the loan officer has been tasked by the real estate company to go out and find another partnership. So that loan officer will then go work for that new partnership, or in our case, will be a partner in the newly formed mortgage company that we would help them do. I spent an hour and a half with this loan officer, and we've already booked the next call where we're going to do a deep dive and meet the team. So amazing opportunities. There's so many scenarios and so many ways, creative ways you can structure this. Too many to cover on this particular call, but the reason you've got so much creativity and flexibility is because you own the company, right? In a true JV model, just for comparison, there's a 50-50 split. The mortgage company owns half, the real estate company owns half. And in our model, we don't own anything. We help you start your company, we help you maintain your company, but we are not owners. We are partners, we're consultants, we're here at an advisory standpoint, but we're not owners. And the reason we can become such great partners, advisors, consultants is because of our experience in the industry. So Collab Franchise is owned by Megan Marsh and Andre Munar. Both of those individuals have been in mortgage for 20 years. And both of those individuals own a very successful regional mortgage brokerage. Megan and Andre both are producers. They have a production background. Andre still originates today. Megan no longer originates because she's focused on building the infrastructure, or has been for the couple of years, focused on building the infrastructure of the franchise company. But when she was a loan officer, she was doing 300 units a year personally. So she knows production personally. Andre knows production personally. I've been in the mortgage industry for 30 years. Over half of that was a loan officer. I then had regional roles for a couple of large real estate companies, a couple of large mortgage companies. So I have a great deal of experience in the recruiting, growth, team building aspect, coaching, and business development. I lead my own coaching group right now. So between the three of us, plus our franchise operations specialist, our operations manager, there's just a ton of experience and support that comes along with the Collab franchise model. So I'm going to keep this one a little bit short today. And here's my ask. If even just a little piece of this sounds interesting to you, please shoot me a DM. You can find me on any of the social platforms. You can find me on, thanks, April. That was very nice, very kind of you. You can find me on LinkedIn. You can find me on Facebook. Shoot me a DM, Google my name. You can go to collabservice.com to get to our website if you want to get a little bit more information there, download our ebooks, and I'd be happy to run a financial model with you and or explain our model in greater detail and talk about some of that creativity that you can bring to the table. by starting your own mortgage company. So thank you to those of you that took the time to watch this live stream, and thank you to those of you that are going to watch the recording. And we'd be happy to answer any questions that you might have. Have a great day.